Good evening, all the joinees. Thank you so much for joining in. Hello, this is Prajakta. I would like to warmly welcome you all on behalf of NGEN Research. So today, for the topic-related discussion during the webinar, we will be focusing on understanding various parameters for analyzing of debt-oriented mutual funds. Meanwhile, others join. Let us take a look at the subtopics that we are going to cover today. So typically, we will understand how do you typically locate debt-oriented mutual funds first on the platform. Next, what all customizable columns are available for analyzing debt-oriented mutual funds performance. So they are slightly different than what is generally considered for equity. So the value at risk, or for that matter, the large, mid, and small cap split, all of those are not really relevant, right? We will understand what all specific columns are there for debt-oriented mutual funds. Then we will have a look at the asset allocation and the credit ratings that are shown as a part of asset allocation in the asset allocation tab of the debt-oriented mutual funds. We will next move ahead and understand multiple parameters like the maturity, average maturities, yield to maturities, that is YTMs, net YTMs, the duration that is visible on the platform to gauge the sensitivity of the bond prices movements to factors that really affect them, like interest rates. We will then move ahead to understand how we can pick and choose certain set of categories to be included in building conservative model portfolios. Let's say a client wants to go on a conservative side of it and wants to focus more on debt-oriented mutual funds. So we will understand how we can build conservative portfolios for him. Here we are going to use in the NGEN Funds course, even for building model portfolios for debt category as well. So we will understand that. Finally, we'll throw the forum open for a Q&A session wherein you can get your questions answered by either typing in the chat box or directly unmuting yourself to speak. So let us now begin. So for the topic related discussion, we are going to focus on first funds and then the compare section. We will then go on individual fund analytics on any of the debt funds and then go to the portfolio section to understand portfolio analytics. So first, as you can see, this is the landing page. What will be directly going on is the fund section. Fund section is like a screener for all the categories and the subcategories across asset classes that are currently trading on Indian markets. So in this case, we are going to focus on debt category. So I click on filter categories as a tab. 4 buckets open up, right? Equity, debt, hybrid, and others. So today we are going to analyze all the debt category funds. So first, let me just choose entire bucket, right? This is the entire debt asset class. And then I'm going to click on close. The moment I do that, you will see, this show top 50 will be chosen because, of course, the universe is going to be larger. So what we will typically do is we will increase this to 100. So, so to a 300 so that we cover maximum funds that can be viewed at one point of time in the fund section. The moment you click on show top 300, you'll have to click on apply for this to take into effect. So now we have all, maximum rather up to 300 funds from across all categories. Now, the first thing that you will do when you come to debt fund analysis is you will change the preset column views from all columns to debt columns only. So we have already customized a debt column view for you. The moment you click on debt columns, all the relevant parameters that should ideally be considered for analyzing any debt security will show up. Right? Initially, it is going to be exactly the same. So the NAV movement, the AUM in crores, the TER, this is nothing but the total expense ratios. Typically, if you will see, next is the net YTM and the YTM. From here onwards, the performance indicators for debt oriented securities actually start. So first, let's focus on the exposures, right? So in this case, you will see this sovereign percentage, AAA percentage, AA percentage. This is nothing but captured on the basis of actual bonds and their credit ratings that these debt securities or these mutual funds actually invest into. So for an example, if you were to just do a further analysis on, let's say, a SBI Magnum medium duration fund, this being a medium duration fund, I simply click on this in a new tab. It gets open in a new tab. The tab that we are focusing on is the asset allocation. Here you will see their exposure or their split into sovereign rated, double A rated, and triple A rated will be specifically categorically given here. You directly have to come to the debt part of it, and in a pie chart, of course, and as well as in the bar graphs, you will be given, okay, as a percentage of debt, as a percentage of the fund, overall exposure into the fund, double A rated is almost 38%. So credit ratings, it works like this. So higher the credit ratings, or rather safer are the credit ratings, the better it is. So sovereign is considered the most safe. That is typically with the government, or the RBI. Next is triple A rated. That's second best. Next is double A rated. Next is A rated. And of course, last is in other cash and other liquid securities. Right. Typically here you will see this sorted on the basis of highest to lowest exposure. So in this case, the highest exposure is into double A rated securities. Right. Now, let's say you want to actually filter all the medium duration funds on the basis of their highest exposure into sovereign rated securities. Then what you need to simply do is you go back onto the screener, because now we are going to consider all the medium duration funds. So I'm just going to untick the debt category. I'm just going to select medium duration funds only. We have 15 medium duration funds, and I click on close. All the results get shown here. And of course, because we have chosen debt columns only, relevant columns only pop up. Now I'm simply going to sort this on the basis of sovereign rated. And I see the highest percentage that is held by a medium duration fund into sovereign rated security, right? A sovereign credit rated security is a Sundaram medium term bond fund. Right. On the other hand, the lowest exposure into sovereign rated security is by a DSP bond fund. Typically, of course, considering AAA rated also makes sense here. So in this case, Sundaram has nothing in AAA rated. It directly goes into the next quadrant, that is double A rated securities. On the other hand, DSP, has 86% of it into AAA rated securities. So this is how you can check the credit ratings of either a list of funds or on a particular single fund. Right now, because we are discussing on the credit ratings, let us directly go and actually build a portfolio of absolutely random, a couple of medium duration funds only. And we are going to see how the credit ratings get captured there as well. So let's say you're going to build a portfolio of 3 medium duration funds. Let's say I've added in Aditya Birla's medium term fund, I've added in Sundaram, and then I'm going to directly add in a DSP, right? These are the 3 medium duration funds that I'm going to consider. What I've done is I've simply clicked on add to compare, and these 3 funds have gotten added in my compare section. All I will do is we are just creating a use case scenario. So I'm directly going to convert it to a portfolio, and a portfolio of these 3 medium duration funds is going to get created. Of course, it is default saved as compare 53. You go to the portfolio section, you typically locate that. Currently, I'm not renaming it, but of course, you could do that. I'll directly click on run. Now, on a portfolio level, if you were to check the portfolio credit ratings of your portfolio, then you directly go in the asset allocation tab to, again, the debt sub tab only. And here, on a whole, as a portfolio as a whole, of course, in this case, it's an equally allocated portfolio. So each component in the portfolio has been allocated equal percentage. So as a portfolio, 47% is into sovereign rated securities. Into double A, triple A rated, 33%, and so on and so forth for the others. Right? So you could definitely check this on a portfolio level. Now, similarly, how we could check credit ratings on a portfolio level, you could also check some other parameters which are with respect to the maturity of the underlying securities that are held by a particular fund. So for an example, let's again go back to the fund section. And for maturities, right, the average maturities, this is what is the column that we are focusing on. This depends upon the underlying securities that a fund holds and what are the maturities of those debt securities. So in this case, we have a SBI Magnum medium duration fund loaded. Let's directly go into its overview. And we see, so it has some GSECs, which have a maturity of 2033. Right? It has some GSECs with a maturity of 2037. Now, all of that, and of course, accordingly, they will be multiplied by their weights, respective weights. Of course, there are other corporate debts as well. Specifically here, there are evidently or apparently there are no maturities attached that are visible here. But of course, there are some maturities that are attached to these particular securities as well. And that is how a portfolio level of this particular fund maturity gets determined. Meaning, when we say that average maturity of SBI short-term fund is 4.93 years, that typically means that all of its current holdings, current debt holdings, right, on an average have almost 4.5, 5 years to mature, right? This is what this means. So typically it is known that debt repeats its cycle in 2 years. So higher the average maturities, your portfolio, for that matter, your fund, is more exposed to the debt cycle that goes on, right? So lower the maturities, that means lesser is typically the risk, because for debt the outlook has to be extremely conservative. So if you typically load in any liquid funds, you will see very, very less average maturities, because their objective is to invest in very, very liquid, easily convertible to cash holdings, underlines, right? So of course these are medium term bond funds, therefore we can see years which is as high as a 6, right? 6.24. If you simply sort this, you will be able to get that. So that's SV Aditya Birla Sun Life medium term plan, which has the highest maturity in this lot. Now again, this was on a single fund or a list of funds. Similarly, you could check this in the portfolio analytics. This is where it gets captured. So this is the average maturity of the portfolio. Of course, in this case, it's an equally weighted portfolio. So the average maturity is about 5 years. Next, let's come on to the performance indicators. So for performance indicators, we have two places to go. One is the net YTM and the YTM that are visible right here in the funds section. Now, and the second place is in the compare section. Now, the difference between these two is these YTMs that will be visible in the fund section will always be since the respective fund's inception date, right? If you want to make changes, right? So if you want to check the YTM typically, let's say for the past 5 years, then what you typically do is you go to the compare section and you locate these funds here. So in this case, we've added 3 funds, and you scroll on to the right hand side. The moment you go on the extreme right hand side, you'll be able to see these YTMs and the net YTM. These are typically the current YTMs and the net YTMs. The moment you change in the start dates, of course, these are subject to change. Additionally, if you want to check in the current returns, let's say you want to have a look at the last 5-day returns of these 3 funds, right? There are 2 places to go. First thing that you will do is currently in the cumulative return, you will see dashes. That's because there is no start date that is input. The moment you put in a start date, let's say you want to check 5-day returns, right? Simply last 5 days returns. I typically choose in 15th of March, that's last Friday, and I click on go. You will now see some percentage appear in this cumulative return, right? So these are the returns for the last 5 days for each of these funds. Again, if you hover on this cumulative parameter, cumulative column head, you will see that, okay, this will show figures only when you put in a custom start date here, wherein you want to run the analysis from. Of course, if I would have put in larger duration, it would be the period, it would be the returns for the period starting this date that I have input. So this is one place that you could go. Another place is, of course, if you reset it back to inception, there are some default column headings that are already visible. So 1-day return, 5-day return, 1-month return, 3-month return. These are already visible. And all of this could be either viewed or downloaded into an Excel sheet as well. So let's say you are now building in some set parameters, right, that you would want to see whenever you are analyzing any debt fund. Then what you could do is go to the main list, click on show and hide columns, and customize your view. The first column that you want to typically look at is the age. How old is the fund? Next, you want to have a look at the total expense ratio, right? Current NAV of each of these funds. So you tick box on the price, right? Next, all you want to typically consider is the net YTM and their exposure split into the credit ratings part of it. So you simply scroll down and typically choose in the percentages, right? So in this case, we want to have a look at net YTMs, average maturities, and its exposure. Once you customize this view for yourself, And you can add as many funds as you want. Once you've added all of these funds, you can simply take an Excel dump of it, and this is the exact data that will get downloaded. So it need not be crowded with all the other irrelevant junk columns, and you can simply take only the relevant columns. So this gets downloaded. I'll show you how that is going to look like. So this is extremely specific parameters, debt parameters that we have taken. These are the three funds that we were analyzing. Of course, the ISI numbers get exported. The age, TER, and the other parameters that we have taken. Only these are visible. Let's now come to the next parameter, which is typically used to gauge the sensitivity in the movement of the prices of the bond securities with respect to interest rates, right? The measure of this is in the manner of durations that are visible. So in this case, you see, we've not taken the duration as a parameter. Let's typically add that. Duration as a parameter is right here. Everywhere on the platform, please note, we show modified duration. So there are two types of durations. One is macula's duration, one is modified duration. Everywhere on the platform, we show modified duration only. Now, the relevance of this is, of course, this is also measured in number of years. Longer is the duration, higher is its sensitivity to the movements in the interest rates, right? So for an example, how will we make this more relatable? So let's add in one liquid fund, and then I'm also going to add in interest rate as a security, and we will see how are each of these components that we have added actually correlated using the correlations tab. So first, let me add in a liquid fund. So I'm directly going here in add a security, directly typing in a liquid fund. So let's consider a HDFC liquid fund. For reference sake, we will just add in one more liquid fund. So let me add in a GM. Now we have two liquid funds. And now, as we discussed, duration is a measure of the sensitivity, right? How sensitive is the movement, or rather, how sensitive is your bond, your underlying bond prices to the movement in interest rates, right? So we'll have to have a benchmark in terms of an interest rate here. So for that, what I have typically done is I have saved interest rate as a security. So on the platform, you will see this markets overview. You will see all the major macroeconomic parameters. So for India, we have interest rates. What I've typically done is I have clicked on see history, downloaded this into an Excel sheet. Once that was done, I went on to my securities tab, which is our tab to typically save in anything and everything that has a time series and a price series. So what I typically did was I went here and I saved interest rates as a security. Interest rates for India, right? So this is the security that I've saved. Of course, these are updated monthly basis. So I have this till 8th of February 2024. The blue series that you can see is actually representative of the step up and step down interest rate movements in the Indian economy for the last XYZ number of years. So this is 14 years, right? Once I've added this security, how do I take this in the compare section? So for that, you go to the compare section, and there is this separate drop down, which lets you select any and everything that you save in my securities. So now I'm going to simply add that. Interest rates for India. So this security is added as a row item. Once this is added, you see you can directly go in the correlations tab. So look at that. So liquid funds. And we are going to compare this with all the interest rate securities, right? So liquid funds, typically JM Liquid and HDFC. First of all, let's come here and see their durations. The first hypothesis that we were building, right? Liquid funds will have very, very low durations. That's because their objective is to invest in very, very liquid securities, and typically their sensitivity to the interest rate movements are going to be very, very less. And that's why durations of these two liquid funds are very, very less. On the other hand, you will see medium duration bond funds having slightly higher, right, durations as compared to the liquid funds. For just a reference sake, let us add in maybe a long duration fund as well, so that you can actually make out the difference, or a dynamic bond fund. So I'm going to add in those two as well. So HDFC dynamic bond is here, typically with a target, investment horizon in dynamic bond could be anywhere between a 3-year to a 5-year, right? And then I'm going to also add in a long duration fund. Let's add in a UTI. This is medium to long. This should suffice, I think. Yeah. So you simply sort this on the basis of duration. The lowest is by liquid. Next comes medium. Next is typically dynamic debt fund, which is 3 to 5 years, and then is medium to long duration fund. So this tells us that UTI medium to long duration fund will have a larger impact of interest rate movements on its prices, right? And that will be exactly visible, typically one in the line charts here, and number two in the correlations, right? So if you typically only want to see movement between interest rates and a dynamic debt fund, right? You simply turn everything else off. You're going to take only these two securities. So now we have interest rates and the dynamic debt. Of course, the correlation is going to be exactly negative, right? Always negative. So interest rate movements will have negative correlations, and that is exactly what is visible. So in this case, interest rates is right here. All the debt securities are having negative correlations with interest rate movements. The lowest of the lot is going to be with the liquid securities. So look at that. Interest rate movement will have only a 0.09 impact on liquid funds. In this case, it's HDFC liquid. That will appear at the top, right? So I'm hovering on the interest rate row. You have to simply look at the top. It is HDFC liquid fund. On the other hand, the other one, which is the lowest impact, is again JM liquid fund. Both of these debt funds from the liquid category have the lowest amount of correlation with interest rates. The next in line are, of course, medium duration funds, which is right here, right? Short to medium duration funds, again, lower correlations. And that is exactly what is visible in the correlations analysis. This is correlation analysis typically helps you in determining how similar or in similar direction are going to be the movements, right? So these are basis the NAV movements of these funds and of course the security that we have considered, right? So this helps us in corroborating with our thesis that we just built, right? Liquid will have very, very less sensitivity to interest rates. So this is what these are the parameters. There are multiple parameters that you could use to screen funds from different categories. Now, of course, we have taken a very diverse look. So what we did was we first compared medium term funds, and then we compared liquid funds with them. Then we added some dynamic bond funds, right? But if let's say now we are through with these parameters, now if you were to choose a best liquid fund, right? What you would then do is, what you would typically do, go to the fund section, just choose liquid as a category. I'm going to choose liquid. We have 51 funds. I click on close. All the liquid funds get shown here. I'm going to simply sort this on the basis of their lowest durations, right? So in spite of being a liquid fund, a 361 liquid fund has highest duration. So I would rather avoid this fund and rather go ahead with a fund which has lower durations, because typically that is the nature of liquid funds, right? So the lowest are these. So I would then pick and choose between one among these funds. So ITI, JM, PGI, Navi, Mahindra. I would rather choose one among these because it falls in the top quadrant for lowest duration funds. Now this is for liquid. Similarly, we did this for credit rating. So if you investor, the investor that you're catering to is an extremely conservative investor but wants to invest in long duration funds, then what you could typically choose is on the basis of their highest percentage into sovereign rated securities. For example, long duration funds, you click on close and you sort them on the basis of highest sovereign percentage. You would then give him a fund which is either of HDFC, SBI, Nippon, or UTI, because it has higher percentage into sovereign rated securities. So this is how you can utilize these parameters, that all of these parameters that we discussed, right? Credit ratings, average maturities, durations, YTM, yield to maturity, to actually come up with better performing debt funds. Once these analytics are done, we will then move ahead at looking at the performance analysis on a portfolio level. First of all, let's understand how we can build a portfolio of conservative securities. Now, in this case, I'm not going to be restricting myself the debt as a category, because even in hybrid, we have conservative hybrid funds, which are typically focusing on debt itself, right? So when we are building in conservative portfolios, we could take conservative hybrid funds as well. That's because their lopsidedness towards equity is much lesser than it is towards debt, right? So they are more concentrated on the debt side of it. So what I'm going to do is I'm going to choose in long duration funds. I'm going to balance it out with liquid funds, which have lowest durations, therefore lowest risk. Next, I'm going to balance this out with some amount of return, which might come in from a conservative hybrid fund because of its some exposure into equity, right? Then just to balance it out with the holding horizon, I might as well incorporate a dynamic bond fund. So these are some 4 or 5 categories that I'm choosing pretty randomly, but this could be on the basis of investment policy document that you would work out with your client. Right? Let's say he has some XYZ categories in mind, or rather he has XYZ goals to achieve. And then accordingly, on the basis of that goal, you could give him funds from those particular categories. Once you choose these funds, you click on close. Once you choose the categories that you want to cater to, right? All of these funds show up. In this case, we have 105 results. Then what you can do is you can specify some basic non-negotiable filter parameters. Now, because again, this is on a very, very conservative side, right? So I do not want to give him very, very young funds. I will say that, okay, I want only those funds who have been around for a period of at least 10 years, right? So that I get a better confidence in giving those funds, right? I put minimum age as 10 and I click on apply. You could use as many filter parameters as you want, but in this case, I'm just choosing in minimum age, which is 10. Now I will sort them on the basis of NGEN fund scores, right? Now NGEN fund scores typically take into consideration the return that each of these funds have generated per unit of risk that they take. Right? Now, these fund scores are comparable only within category. We are not going to compare a liquid fund with a fund from long duration because simply they are not comparable. If we are comparing a IPRU all seasons bond fund, which is typically from the dynamic bond as a category, we are saying that, okay, this is the best performing dynamic bond fund. It has a rating or a fund score of 8.94, which is the best among its peers from all the dynamic bond as a category. Right? So that's what we are saying. So once we go here, we can typically see which category this belongs to. So for that, I'm just going to turn this on subcategory part. Right. So I have a dynamic bond fund, best performing dynamic bond fund in the form of IPRU. So first I'm going to do what I'm going to do is I'm clearing off the compare list. This is now cleared. So I'm going to choose this one. So IPRU all seasons bond fund is there in my compare section to be included in my model portfolio. This has the best NGEN fund score, so it has best return per unit of risk that it takes. Right? This is one parameter that I'm following. You could choose to employ some other parameter. Let's say your parameter is on the basis of lowest durations, or your parameter is on the basis of highest sovereign rated. That could be customized. Next, on the basis of conservative hybrid part of it. So the best performing conservative hybrid fund looks to be a SBI conservative hybrid. So I'm going to simply add this in my compare section, and this gets added right here in the compare section. That's the 2 categories that we have addressed. Now let's come to the 3rd category. That's the liquid category. So we have chosen 4. So I'm going to include 4 funds. So GM liquid seems to be the best fund. That's because on the basis of NGEN FS, in the liquid as a category, it has the highest fund score. I'm going to add that in the compare section. That is added. So I've catered to 3 categories. The last category that is typically remaining is, I think, long duration. So in long duration, let's locate the best performing long duration fund. As of now, it is a IPRU long-term bond fund. So you can typically choose to include that in the compare section. You add this, all of these 4 funds are now in your compare section. You simply convert it to a portfolio, and a mutual fund portfolio, which is lopsided on the conservative side of it, will get created. I simply convert this to a portfolio. This saved as compare 54. You locate the portfolio section. Because this is saved from the compare section, you click on this. This is the portfolio. First of all, you rename this. Once that's done, simply load this for analysis. Currently, as you can see, it's an equally weighted portfolio. Now, if you were to go more so on the conservative side of it, so you want to go on a more conservative side, then what you will do is you'll typically use this improved functionality to come up with optimal allocations that will be given to each of the components that are already there in the portfolio. Typically, if you were to analyze this on a 5-year basis and you simply click on improve, you will get a strategy which is a minimum volatility strategy, which will give typically the highest allocations. Typically no points for guessing. Highest allocations will be given to liquid fund, right? Only then will it become a more conservative portfolio. These are the original allocations that you can see. Original are equal allocations. If you want to go still more conservative, that is the minimum volatility model is what we will then be targeting, because original portfolio also has a volatility that is a risk of 2.28%. If you want to go further down, right, then the minimum possible volatility of this portfolio is a 1.5%. To attain this minimum volatility, the allocation that you should be giving is like this, right? Even before seeing, we can we can guess that highest allocation will be given to a JM liquid and the lowest allocation will be given to SBI conservative hybrid fund, because for the simple reason hybrid will have some equity, right? And that is exactly what is the case here. Highest allocation is given to a liquid fund, next of course to a dynamic bond, then to a longer term bond fund, and then last is to conservative hybrid. Once you think that, okay, this suits the conservativeness that my client wants to achieve, then you can simply save these allocations. Of course, this will be saved as conservative strategy optimized, which is minimized volatility, and then you click on create. Once that is done, because this is saved from the improve section of it, you will be able to locate this portfolio in the from improve folder. You click on this, you'll be finding the portfolio right here. You click on run, and now the allocations will be changed accordingly. Again, to repeat, the first part of it, the asset allocation, if you want to check this on a portfolio level, it will be right there. So in this case, the debt, of course, is a debt-centric portfolio, and therefore you will see the automatic benchmark that is chosen for this portfolio benchmarking is the reference index 10. Now, what is reference index 10? Reference index 10 is 90% CCL bond index. Now, of course, the 10% equity is coming in from the hybrid fund that we have included, but majorly it's a debt-oriented portfolio. These are all its current exposures. If you want to see where is this T-bill 364 days is getting exposed in this portfolio, you simply click on this I button. You will know GM liquid fund, right, holds onto this T-bills. If you were to check the average maturity of the portfolio, YTM of the portfolio, that is right here available. This is how you create conservative portfolios, and then you could generate proposals out of this. We have definitely covered how to generate proposals, PDF manner, PPT manner in the previous sessions as well. So this was all about the analyzing part of debt securities from my side. Thank you so much. If you have any questions, please go ahead.
Hello, madam.
Hi, yes.
Madam, I am Subhangshu Roy from Calcutta, White
Yes.
House Services.
Okay.
I have one slightly unrelated question. Can I ask you? That is, we are having this previous day NAV concept only for liquid and overnight funds. So can you just please explain us the concept of the previous day NAV? I mean, how it is possible to allot previous day NAV?
A lot previous day NAV, you want to check the NAV series, is that correct?
No, not the previous day NAV series, madam. I want to know what is the internal technicality that is happening so that the previous day NAV can be allotted. I mean, in no other funds we are having previous day NAV or historic NAV. But suppose, for example, if I make a purchase today before 1:30 in any of the liquid or overnight funds, I will get the NAV of 21st March. I'm sorry, 21st March. Today is 22nd, 21st March NAV will be allotted. So I just wanted to know what is the technicality, internal technicality that
Well,
it is
let me
possible.
come here. Let me come here. This internal technicality, there can be answered by the fund managers themselves. And so this is a platform to analyze the NAVs. So I would suggest that if you could talk to the fund manager of the respective funds, that would help you to answer your question.
Okay, sir. Thank you.
Sure. So there's a question in the chat box which says, can you tell how to add interest rate Excel in compare section? Sure. So first of all, the first step that is required from your side is you go to the markets tab, you locate interest rate, which is the macroeconomic parameter, click on see history, and there's this Excel download option. I simply use this to download it into an Excel sheet. So I'm going to open it for you. I just did this right before the session, so I think this is it. Yeah. So this is how it gets downloaded. This is how the Excel download will look like. Now, what happens is when you have to upload it as a security on the platform, you'll have to go to this My Securities tab. And in My Securities, there is this weekend check, right? So we cannot capture anything that is reported on Saturdays and Sundays, right? Therefore, before uploading it directly from an Excel sheet, you will have to incorporate a weekday check. That's an Excel function. That's a simple Excel function that is helpful in doing that. So for that, I will open up another Excel sheet, which is already ready. All I've input is this function, Excel function. You put in a weekday function and you take this date. So you check whether this date is a weekday or a weekend. So how it works in Excel is the week starts from Sunday, right? And Sunday is allocated number one, right? You have to ensure that there are no ones and sevens. So 1 represents Sunday and 7 represents Saturday. So you have to ensure that there are no Mondays and Saturdays. So what you do is you click on this filter and then you say that I have to increase ones to twos, meaning you add 1 day by removing the ones and then you minus 1 day. So to make it 6. Once this is done, this weekend check is done, you simply copy this data from an Excel sheet, Control C. Once this is done, go back to NGEN Markets, my securities, paste this right here and say validate. It will validate all of these data points from the time series and price series that you have uploaded. You have to name it, right? So let's say these are, of course, these are interest rates, right? I'm just going to name this as okay, interest rates. I will choose an asset class. I mean, this is not something that is helpful in capturing the underlines, but simply for the identification parameter of it, right? If you were to include, let's say, these in portfolios, then that will be helpful. But in this case, we are going to choose others. And then I'm going to click on save. This is how you save a Excel any macroeconomic parameter. Now, in this case, we have taken interest rates. It could be inflation rates. It could be commodity prices. It could be anything and everything which has a time series and a price series. This is all you need to save and create a security. Once the security is created, let this get saved 1 second. Yeah. Once the security is created, you go here in the compare section and there is this option to add portfolios and securities. Click on this drop down and type in the name that with which you have saved it. So in this case, we've chosen interest rates. This is the one that we had just saved. You click on this, it will get added as a row item right here. This is how you add it. Is this clear? No problem.
Hello.
Yes.
Yeah, madam. I'm actually see I'm using the back office services from some other company for the client portfolio and all the reports. So can I get to services excluding this part, only the research part, and research part, you can say only the research part can I get from your services?
Yes, I mean, yes, I will get you connected with our business head. So we have two models, the
Okay.
lighter version and the premium version. You could definitely discuss it with him. The research part, typically what you're saying is until the compare section that comes in the lighter model. Until the compare section. If you want a full-fledged portfolio analytics tools and this My Security is also enabled, that comes in the premium version of it. I will ask our business head to get in touch with you shortly after the meeting.
Okay, right. And for the client portfolio, I think you are not having the mobile app, I guess.
Sorry, client portfolio analytics.
Yeah, you have only the dash.
Yeah, it's accessible on a laptop system. But if
Uh,
you were to share links to clients'
uh,
portfolios, right,
mhm.
then those could be shared on a mobile-based view as well. Meaning
Okay.
the full-fledged app will not run on a mobile, but only his portfolio. For example, Rakesh Kumar's portfolio, I want to share with him on his mobile, right? Then there's this client link view
Mm.
wherein you can create this entire portfolio analytics for Rakesh Kumar and send
Mm.
it across on his mobile. This is how it will look on his mobile phone.
Okay, right.
Right.
That will not be the part of my if I take only research services from your side, from your side.
Yes, the RTA connection is a part of
Okay.
premium version. Yes, so
But
that will
I
not be
I
available.
will be able to generate the client, proposal presentation for the client. If some client asks me to make a proposal, so I can make it by using your research part.
Yes, that is
Uh,
possible. Creating.
Yes, absolutely. This is Arunab. So once you get the premium version, you can get your client data inside the application in various different ways. One is a direct RTA connection. There are other ways as well. But once your client data latest holdings are in the system, as you can see on the left-hand side, you'll be able to see the clients. You'll be able to run the research report. You'll be able to, print out a desktop share link or a mobile share link or a PDF or a PowerPoint, whatever you want. So
Okay.
it's just a matter of getting your latest client holdings into NGEN, and there are various different methods to do that. So we can take you through them separately.
Okay. So it will be like white labeling, including my logos and name, everything.
It's co-branded, so your logo will appear on the top left of almost all reports.
Okay.
There's a small powered by NGEN logo on the right, usually.
Okay.
So we're just showing you the PDF report here, for example.
Yeah, so this is how the PDF looks. In the premium version, this reports are co-branded. Right here, the predominant logo will be your logo.
Okay. Right.
Any other questions? Please let us know.
No, nothing. So thank you.
Thank you. Okay, if there's nothing else, we can close for today.
Yes, sir. Thank you so much for joining in. You can definitely have a look at our previous webinar recordings on our YouTube channel. A link to it is right there into the system. Simply go on this YouTube link. There is a separate dedicated playlist that we have created for all the webinar recordings. You can definitely locate that. Already 105 plus videos uploaded. So until then, please stay tuned. We'll come up again next week with an exciting topic. Have a great weekend ahead. Thank you so much.